Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked, your go-to podcast for transforming tax time dread into strategic financial empowerment. I'm David Robson, your host for today's deep dive into the future of taxation and how upcoming legislation could impact your wealth. Whether you're a high-income earner or a small business owner, the word tax alone might send a chill down your spine. But don't worry, we'll approach this with not just professionalism, but a touch of humor to ease the tension. Let's start with an overview of the anticipated tax legislation changes. As we move into a new phase of governmental policies, we're seeing proposals that could significantly impact tax rates, deductions, and credits. It's crucial to understand not just the proposals, but also their timelines. So, what can we expect? Many lawmakers are pushing for changes that could increase rates on high-income earners, aiming to redistribute the tax burden more equitably. Deductions and credits, on the other hand, might undergo reforms that could shrink their availability, especially for certain income brackets. The implications of these legislative changes are vast, especially for individuals and businesses already feeling the weight of their tax bills. For high-income earners, the increase in tax rates could substantially reduce net income. Business owners might face a double whammy with both personal and corporate tax changes affecting their take-home profits. But it's not all doom and gloom. Understanding these changes gives you the power to adjust your strategies proactively. This brings us to the all-important strategies for proactive tax planning. One of the most effective ways to mitigate potential tax increases is through strategic income deferral. Consider delaying bonuses or other income to a year with a predicted lower tax burden. Additionally, maximizing retirement contributions can reduce current taxable income. It's all about making each dollar work harder for you. Don't overlook the benefits of capital gains planning either. By timing asset sales, you can take advantage of the currently lower long-term capital gains rates before any increases take effect. Staying informed is paramount in this rapidly changing tax environment. Keeping updated on policy developments isn't just about reading headlines. Dive into the details, attend seminars, and reach out to tax professionals. It's like being a surfer. You don't just want to know a wave is coming. You want to know how big it's going to be and in which direction. Making timely decisions will be key in ensuring you avoid getting washed away by surprise tax hikes. Let's look at some case studies to give a clearer picture of how proactive planning can minimize tax liability. Take, for example, an entrepreneur who capitalized on opportunity zones. By reinvesting capital gains into these designated areas, they deferred and potentially reduced their tax obligations. On the individual side, a high-income earner who strategically donated appreciated stock instead of cash saw a beneficial impact on their tax bill while also supporting their favorite charities. Now, with new legislation on the horizon, financial positioning is more critical than ever. Assess your current assets, liabilities, and create a sustainable model that anticipates income fluctuations based on potential tax policy changes. This might mean diversifying income streams or restructuring business entities to shield earnings more effectively from tax obligations. In terms of working with a tax professional, this relationship should really be seen as a long-term partnership. A tax professional can highlight overlooked opportunities for tax efficiency and guide you in structuring your affairs to minimize liabilities. Regular check-ins with your advisor, especially when anticipating legislation changes, could result in significant tax savings. Before we wrap up, let's tackle some common questions and misconceptions about new tax laws. One major myth is that there's nothing you can do to mitigate tax increases. In reality, proactive planning opens up a treasure trove of strategies to reduce your tax burden. Another misconception is that tax planning is only for the ultra-wealthy. In fact, small adjustments can have meaningful impacts for anyone across various income levels. As we reach the end of today's episode, I hope you're feeling more informed and empowered to navigate the future of taxation. Remember, understanding and planning for forthcoming tax legislation doesn't just protect your wealth, it can strategically enhance it. The insights shared today are designed to help you demystify the complex tax landscape, turning uncertainty into opportunity. Thank you for tuning in to Tax Smarts Unlocked. If you found today's episode valuable, I encourage you to subscribe and share with others who are looking to unlock their tax potential. Until next time, keep your tax strategies sharp and your humor even sharper. This is David Robson signing off. Stay smart, stay informed.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.